Welcome, guys. Welcome to this brand new video. This is like the third topic we'll be treating on this ICA Academic Trading course, and I'm super happy to be able to help you guys and to get the right knowledge that you need to stay profitable in the trading industry. I'm really, it's a pleasure. It's something I really wanted to do from the bottom of my heart. Okay, so topic we're having today is inducement. Inducement. I know a lot of you guys, some of you guys that are already have some knowledge that have been in the industry for a while. We're like, oh, we do these things. I mean, we've seen videos on inducement and all these things. Now, I want to make some things very clear. Like I've said in the previous videos, I am not teaching how the market works. I am not the author or the creator of heaven and earth. So I don't know. I'm not going to tell you, oh, this is how the market works. This is how this thing works. You understand? Like if you check all the videos I'm going to be giving you, I'm really not going to be emphasizing on things like liquidity. Now, I'm not teaching how the market works. I am teaching my system. That's what I want you guys to understand. I'm teaching my system. I am teaching what I use to take trades, what I use to get setups in this market. Now, there is something I used to tell myself. I used to tell myself that don't trade the market, trade your system. I literally don't trade the market. I trade my system. If my system tells me, oh, this has happened, do this, I do it. This has not happened, do this, I do it. This has not happened, don't do this, I don't do it. So it's as simple as that. That is what a system is meant to be. A system is supposed to have an embodiment of your methodology, the way you approach the market, maybe support and resistance, supply and demand, smart money, algo, ICT, any kind of strategy that you use. That's the methodology, and it also has your risk management plan, your to determine your risks of run, and just your entire management plan, and your system has to have an objective entry and exit rule. Yeah, you need to have those things. So what we need to be successful in the trading space is actually not strategies and this and that. It is basically a system. And that is one thing that I know that when I was starting and trying to get, I was not finding it. So I always knew there is something more. I need something more. I need a system. Even if I didn't know that it was called a system back then. But I just knew that because then you buy a course, you watch the entire course, maybe support and resistance, maybe smart money, anyone. You just learn concepts, learn different concepts, and then there's nothing else again. There's nothing, you don't even know how to apply them. So that is what I'm trying to do. I'm trying to change that narrative. I'm teaching a system. I'm not teaching you how the big boys move the market. Nothing concern me and the big boys. My own is understand what you are looking for in the market. Once you see those things, you enter it. Just like what Mark Douglas said, when your system provides a setup, you don't think you enter it because you are trading a system and you're not trading the market. I don't care if there's a news release coming up, except maybe you're trading a prop firm or a personal account. You don't want to blow your account, so you just leave news one side because of its rapid movements, because of slippage. If in a situation whereby there isn't slippage in our space, then you can trade all these news and then there's nothing, because you know that when you put your stop loss, market will just take you exactly where your stop loss is. But because of slippage, you just have to manage those things and manage your risks very well. So I am not, like I said, I'm going to repeat again. I am not teaching how the market works. I am teaching my system, how what I trade. Some people say don't trade pattern. Oh, but I trade pattern. As long as your pattern is profitable over time, man, you're good to go. So just see your setup, trade your setups. You don't have to understand the entire thing. You don't have to. A lot of people emphasize on macro this, macro that. It works for them, fine. But you still really, even if you get the macro, you need a setup. You cannot just get fundamental and then place buy and sell anywhere in the market. No, you need these setups. So those things are confluences to make your edge have good higher win rates. So that's just the whole idea. So sorry for doing all this brief clearing the air and then or making certain things straight at this very beginning. So let's move straight into the video. Inducements. So I'm going to teach how I look at inducements and how to spot an inducement. And like I said, all these things are processed into finalizing the system. So these are the things that I use, or these are concepts for. And let me put this: it's not about the name. It's not about it being called inducement. I can call it anything. It's not about the name. You just need to understand the concept and how to spot these things. And I'll be explaining them in this video. So in the previous videos, we've talked about proper pullback, how to identify valid and invalid pullback. We've talked about market structure, and I hope that, and I believe that you guys should be able to, you guys now understand very well, because I believe that you guys will practice so that you can um, get used to it. You now understand what higher highs and higher lows means, what lower highs and lower lows means, because you now know how to determine your trend in the market. You now know how to identify valid and invalid pullback, because you need those knowledge to spot an inducement. That is why I said you have to take these things step by step. I'm teaching my system, and these are the things I use in my system. So I'm going to draw a particular trend. It's going to either going to be bullish or bearish. So let's just go straight into the chart. So let's say in a scenario whereby we are in a bearish phase of the market, and market is, and when we are in a bearish phase, it means, or in a bearish trend, it means that the market is creating lower highs and lower lows. So the market starts from this high, comes create a lower high, a low, yes, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Now, from the teachings of the last video, which is the number two topic we worked on, was identifying valid pullbacks. So with your knowledge of how to identify pullbacks, then you can now know if, based on the ray chart, on candlestick, you can now know, is this a valid pullback? Is this a valid pullback? Because there are some cases you have some things that looks like a pullback, but they are not really a pullback. So they'll just be maybe just one leg like this. So maybe this all things that look like a pullback is just inside of that candle. So that's what I'm talking about. That's why it's very important to be able to identify valid and invalid pullback to move to the next phase. Now, so I'm not going to be explaining, this is what inducement is. Inducement is when liquidity. No, 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 no. I'm just going to say how I spot inducement, or what I classify to be an inducement based on my system. And it's my system we're talking about. I'm not talking about who moves the market. So inducements. So basically, when we are in a structure, you've identified a structure trend, either be it bullish or bearish. In this case, we are working with a bearish example. Now, since we have a bearish example here, what is going to be our inducement? How do you spot an inducement? So to spot an inducement is the last valid pullback that the market created. The last valid pullback that the market created. So you understand that a complete pullback, is when the market creates a low, moves up, takes out the candlestick high, and then comes down and break the structure. So we know that, okay, market has to take the candle high in a bearish phase, case the candle weak high, and then come back and break this low. So once the market breaks this low, either by wick or by candle body, anyone, that particular high, the last high that was created, becomes an inducement. That is our inducement. That is our inducement. So when I learned smart money, we are taught to buy at every other block, and you know that for every pullback there's another block there. There is always another block for every pullback. So if this is a pullback, there's another block there. If this is a pullback, there's another block there. If this is a pullback, there's another block here. And since this is a pullback, it means that there is an other block here. But according to my system, I am not supposed to sell at this place. I need to wait for inducement above here to be taken. The liquidity that was created by the inducement above here to be taken. So, like, there's a liquidity. Like, what is liquidity? Liquidity basically means that there is actually liquidity in every highs and low in the market. Liquidity basically means money. So for every high and low of the market is a price. It's a particular price there. For every candlestick form, there's a price. So liquidity is everywhere in the market. So all we have to do is spot the liquidity we want to trade with, we want to trade from, we want to trade to. So those are the things that you need to understand. So there's liquidity here, 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 there's liquidity everywhere in the market, of every highs and every lows, every price that is printed is moved, it's money. So you just need to pick out the one you want to work with. So at this very high, this is our inducement. So let me repeat it again. So let's say in a bearish phase, like I said, what is how do you pick an inducement? An inducement. Let me type it out. So according to our system, inducement inducement is the last valid pullback pullback last valid pullback price. But let me say the last valid complete pullback price created. So you just need to stay understand that and then take note of that. And it can be either it can either be bullish or bearish. On a bullish trend or on a bearish trend. So that's it. Inducement is the last valid complete pullback price created, bullish or bearish. So that's based on my system, and I'm gonna stop repeating that. I hope you guys have understood that. Now let's say we're on a bearish phase, we're on a bullish phase rather. On a bullish phase, market's created is going up. Let's look at this scenario. Market printed this high, market was coming down, came down. Now, before market takes out this high to complete this pullback, right? It did. Market did under internal stuff like this, and then breaks to the upside. In this case, where is going to be our inducement? Like I said, inducement is the last valid complete pullback price created that last price complete pullback price created, bullish or bearish. This is the last pullback that price created in this phase, in this scenario. This is our last pullback price created in this scenario. So which means that this is going to be our inducement. So if price comes, okay, that will be later on in the video. So we will learn how to trade an inducement. So basically, okay, let me just say it now. How we trade inducement is basically we need to see price take out this inducement level, and then we look for a buy at our POI or order block or AVG level. So that's how we trade inducement. That's what we trade. That's what I trade. So in a scenario whereby price now prints another low like this, a lower high, a high, a higher low, and a higher high, a new higher high. This now basically means that our inducement level are shifted from here to this place here, and our POI would be at this place here, either at this place or at this, or you can take either the two of them, or you can take one, and then if it fails, you take this other one. So we're going to look at that later on in the videos. As we progress in the videos, we're going to look at how we can trade them when we dive mainly into the system and we put them together to now have the complete system. Now, so that's basically an inducement. Inducement is basically the last pullback that price. So if price did another pullback again, our inducement shifts from here. Okay, let me remove this. If price created another pullback like this, or let's even say double pullback like this. So we have this is a complete pullback because price created this higher high, created this lower low, and then it broke it to the upside, creating this new higher high. So it basically means this is a complete pullback. So a complete pullback looks like something like this, like this. So this is a complete pullback because it's coming from somewhere, created this point, created this point. It has these four complete swing points. So this is a complete pullback. That's that's it. So our inducement is not, this is not our inducement. 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 This is our new inducement because that is the valid, the most recent, the last, yes, the most recent or the last complete, valid, complete pullback that price created. So if price comes and take it out, then we have price. Then price has now taken out our inducement. Price has taken out our inducement. So that's how to spot an inducement according, based on the system. Moving forward, you just need to understand that. So let's look at other scenarios. Let's look at on the bearish phase. Bearish phase, price did something like this, and it did like this, and this is, and price is coming back, then this is going to act as our inducement for us to sell price to the downside. But if price does something like this, let's say we have a scenario like this, and the price does like this, then this is our inducement. But if price prints one more, then this is going to be our inducement. We look to sell from here, and it's as simple as that. So this is our inducement. This stands as our inducement. This is not the inducement. This is not the inducement. This is our inducement because this was the last valid complete pullback that price created, and then price came to take it. So if price did not take it out, if price did not take out this one, and then price just printed this one again and then broke to the downside, then that means our inducement will be shifted to this place here, and this is not going to be our inducement. This is going to be our current inducement, waiting for price to come back and take it out. So that is it. That is it. That is based. That is the understanding of inducement based on my system and the system we're going to be working with. So see you guys in the next video.